All right. So we're going over the trading plan, and we're definitely gonna be going over pops. So I want to make sure that you guys have a notebook and a pen. Okay, this is not just some information that you can sit and listen to me. You have to take notes. You have to take notes. You have to take notes, right? Take notes, study the notes, apply the notes. If anything is not clear, reach out to myself or any other leaders so that we can clarify anything. But we need you guys to get this information. Follow your training plan, follow your risk management, and just be disciplined to this going into 2021, because we need these 50 chairmen on and off the charts next year. Okay, you guys? We need it. So if you have your notebook and your pen, just put done in the chat. I'm about to get started, but I need you to put done in the chat. Done, done, done. If you have your notebook and your pen, let's go. Let's go. Let's get it. Let's go. All right. Sandy Duns. Sandy Duns. Yes. Awesome. If you see my screen, just let me know. See my screen. I think you could. Yes. All right, let's go. All right, so you guys, this is the trading plan. All right, Kirk is currently working on a much nicer version of this. I literally wrote all of this out, but you guys already know Kirk comes in clutch with the graphics. But for now, this is what we're working with. All right, so we go. You can head up. Sorry about that. I live on a main road, right? So you can head up I taught trading plan. So of course, before we get into all the risk management and what we're supposed to be doing on a daily basis with our money, it's important to have a solid foundation. We already know, if not without a solid foundation, that house is just gonna crumble, right? And if you do have a solid foundation and you get to a level where you're really skilled in your niche, right? You're really skilled, but at times you get exhausted, right? Anybody on the call play sports before? I could relate to sports because I played hockey for Barbados. I was playing hockey since I was 10, and I remember countless times us having to go to practice, and we would always have to start off with the simple stuff, right? Just running with the ball on the stick up and down. And I just used to be like, before I understood, I would be like, fam, like we at senior level. I don't think that we need this. But it's really only when we get into the game and we get super tired, it's the last quarter. It's the last quarter, and we already know our games are won in the last quarter, and you are exhausted. And me, I never used to get much subs because I was a girl that could play defense, midfield, forward. I could score, I could save, I was everything. I was an all-rounder, so I wasn't getting a bunch of subs, right? And when I was tired, like dead tired in the fourth quarter, and I could barely get a sip of water, but I had to be back on the field. It was the basics. It was the basic stuff that I was complaining about doing before every single practice started that I had to revert to, because that did not require a lot of energy. That did not require a lot of mind power. And so the basics are important, not just in sports, but with your investing, with this skill set that you're learning, right? You have to make sure that you have a solid foundation on the basics. And it's important for you to go through the academy. If you've been in the business for 5 months, 6 months, or you just got started, the basics are important, right? If you're here for 5, 6 months plus, there's nothing wrong with going back over the basics. Absolutely nothing wrong with getting a refresher. Like for me, I went back over the basics 2 weeks ago. Believe it or not, I upgraded to I actually watched the basics from the HFX side, right? We can't trade if HFX here in Barbados, but I just wanted to learn it, right? And I went through the basic academy, and on the HFX side, it's literally the same information until it starts to get to how to actually trade HFX. And I was telling Danny, so I was like, I feel like the HFX side does a way better job of breaking down the basics from my knowledge, right? For in my opinion, than the FRX side. I mean, the FRX side is really understandable, but I think the HFX side does a really good job, and the videos are even shorter, believe it or not, right? So I even go back over the basics, sorry, and it's supposed to be 3 years in February that I've been doing this. So there's nothing wrong with going over the basics, and if you're new, like I said, make sure that you're in there, make sure that you're in it, right? So log into your academy. Forex English, you already know the 100 series, something as simple as pips, right? Pips and lot sizes. We have to know that every single day. So if that has not clicked for you yet, 111 and 112 is different, right? Go back and rewatch that. You would be surprised that not going over the basics after a few months, and then you go back there and rewatch, something stands out to you even more than it did when you first started learning. So basics are super, super important. All right, you guys. So I want you guys to screenshot this. This is the trading plan, right? Like I said, Kurt is working on a better image, but for right now, this is what we got, right? So take a screenshot of this, because this is literally your blueprint to how you should be running your business, and we're gonna break it down. But once you have this screenshot, I want you guys to somebody or some of you post it in the takeover trade ideas, not trade ideas, sorry, the takeover the takeover chat. So who's not on this call can see the trading plan and know, okay, I'm supposed to know something about this. I have to make a better effort to get on this training so that I can understand what these rules 1 to 6 are, right? So take a screenshot of this, post it in the chat, and let me know when you're done so we can move on. Type of 1 in the chat if you have it and you've already posted it. Let's go. Awesome. Renee out the back first. All right, so you guys should have this screenshot. Also want you to take a screenshot of this supreme chart and also post it, right? Because we know everybody's not going to be able to get on the calls at the same time. We got like 79 on the call right now. Some people may still be at work or in transit. We don't know, right? So we're gonna look up for our family that is not here. So take a screenshot of this, not just for yourself, but for our other family members in the group chats that are not on this call, so that they can see that we have a supreme chart showing them the lot sizes, the dollar amount that is equal to, as well as some pip examples that they can learn. Okay, a 0.02 is 20 cents a pip, and if the trade is 60 pip stop loss, I can see that that's a $12 risk. Okay, so this is important, and it's very helpful if you're still finding it difficult to understand lot sizes to dollar amount by pips. This is definitely something that you can revert to on top of the Sting U app, but we're gonna get to that. Right, so if you have a screenshot of this, type a 2 in the chat so that I can move on. Awesome. I want you guys to keep the chat open, right? Because I want some participation. I can talk to you, you can talk to me, and like Danny says here, it's a conversation, right? And if you're not clear on something, family, just let me know so that I can go over it or find a better way to break it down for you before moving on. All right, so we have the trading plan in our phones, and I'm gonna break down each one. So rule number 1 is to relax. Can you guys type that in the chat for me? And we don't just spell relax with 1 S. I know that's how it's spelled in the dictionary. That's how you're gonna write it in a professional setting. But here we want plenty S's. So can somebody give me an example of that in the chat? Relax. And you gotta stretch it. When you're saying it, you gotta stretch it. Relax. And you may find yourself saying this to somebody outside of this business that are gonna be like, well, why are you stressing on it like that, fam? Like I legit had someone, okay, right? I legit had someone DM me and asked me a question, and I was like, relax, and I spelled it the exact same way, and I think they were a little offended. I was like, well, you gotta gain the culture, right? So why relax? Why is rule number 1 to relax? Because if you're new, this is a little you could get a little let, right? Because I understand, I could remember when I was new and I entered my first trade from swipe trades, and I was excited and very, very nervous and definitely not relaxed. Actually, as soon as the trade went into profits and I saw 10 cents, I took the trade out because I was like, well, first of all, didn't have that when it started, right? So I was not relaxed. I was just, playing around with it, and I saw some profits. I saw my screen went blue, and I was like, I'll take it, right? So I understand in the beginning it could be a little nerve-wracking, but if, after 30 days, 60 days, and you still finding yourself not so much relaxed when you're taking trading days, you find yourself staring at your phone too long, messaging the person that got you started and asking them if they think this trade is going to turn around anytime soon. that's a sign of you're probably not following your risk management, right? Because every single trade that you're going to, you should know what it is that you are risking, because that is going to help you to be even more relaxed and know, well, okay, even if it takes an hour to 10 hours for the trade to hit stop loss or take profit, it doesn't matter, because by me taking that trade, I knew what I was risking from inception. Okay, so it's all about, like, trading is literally just 10% the skill, right? And I know that somebody on the call is probably saying just 10%. Like, I thought this was the most important part. No, absolutely not. Trading is so simple. I promise you, if you spend the time learning it, it's going to click. It's simple. Literally, we just need to identify some patterns, uh, flags, head and shoulders, simple stuff, right? Maybe a few exhaustion weights. You will learn a candlestick pattern or two. That is simple. What's the hard part? It's us. It's our mindset. Because we want it no, we need it no, and we want to get it no, like right now. It's a $6.6 trillion market. I need at least one today, one tomorrow, one the next day, right? So we are so caught up in wanting the money right now, and the skills, thinking that, okay, because I learned the skill set, I can get all the money. Really and truly, that's not it. I am proof that just studying the charts and not working on me, developing me as an individual, the money is not gonna come, because money is gonna run. If you're chasing it, it's just gonna continue running further and further away from you. Okay, so you gotta work overtime on becoming that six-figure earner mentally, right? You have to work on becoming that six-figure earner here first, and then the money is gonna come. Because if we were, you know, at a level where six figures is for us, whoever we are right now, we would already have it. And that's a fact, right? There's a reason why we don't make six figures, yes, because if we got it right now, we probably won't have it for the rest of our life. We probably won't be able to go from 100K to 200K to 500K to a million, because we were mentally prepared for it, right? So that's it. That's why it's important to work harder on the 90%, which is the mindset. And you guys hear us say this all the time, and it's not just something that sounds good. This is a fact. If you listen to any 6, 7, or even 8-figure educator or leader in this company, they're all going to be saying the same thing, right? And I understood it even more so last November, when I realized that I really know how to trade. Like, I understand. You guys could ask me pretty much anything about a chart if it minus any indicators, because I don't really use indicators, right? And I could tell you, I could explain it, but for some reason my results weren't adding up. And that was because I was working on my skill set like it was the 90%, and my mindset like it was the 10. So I had it all mixed up. And when I switched that, trading became, I definitely felt relaxed in every single trade. Every single trade. I haven't blown an account in over a year, right? November was a year since I blew my last account, simply because I understood this right here. Just rule number one. We just had rule number one. If you can get this, every other rule that we go over here is gonna be key. I promise you, right? And some things that you can tap into to help you with that 90% is right in the academy as well. Listen, we legit have a one-stop shop here at I Am Mastery Academy. You learn to trade, you get trade ideas, you can get into drop shipping. If you're in the right space, you can do high frequency trading, as well as become a better person from somebody like Bob Proctor. If you don't know who he is, you definitely need to do some research. This guy has created thousands of millionaires, not because he had a tangible product for them to buy from him and sell back. No, because he helped them to become it here first, right? He helped them to become that 6 and 7-figure earner in their minds first, and whatever product or package that they were attached to in their whatever company they're in or whatever business they have, they then become that in the physical. So Bob Potter is definitely somebody that you guys could check in, tap in with, and he has a whole folder in the academy. He's the mindset coach. Now, does he trade? No, he doesn't. But he literally bought into the vision of this company. He believes in Christopher Terry. He sees what this company has done in this short space of 7 years, and that's the reason why at first it was absolutely free for his mentorship. Every single week we would get a brand new training from Bob Proctor himself. For I think it was almost a year. No, for just an extra $22, you get to learn from a man that literally creates millionaires from helping them shift their paradigm. literally. And who else not to tap into than the OG himself, the stalwart when it comes to the foreign exchange market, Mr. Christopher Terry, the CEO of this company that we're a part of and that we're learning from, right? This man has 20 plus years experience and trading in the foreign exchange market, made multiple seven figures from the market. He's the best person for us to go and hear what type of mindset he has at his level, so that then we can have that at the level that we're at, right? From day one to year 3. This is where most of us are at right now. He has 20 plus years. If we can adapt his mindset, no, you could imagine we be leaps and bounds above him by the time we have 20 years experience, right? So you have these two goals, right? Greatest of all time, right in your back office for you to tap into and really work on that 90%, so that when you do master that 10%, because remember, you're learning the skill over time. You're copying the pros now, and you're learning the skill set over time. And once you work on that larger percentage now, when that skill set really clicks, you're unstoppable. Okay. So rule number 2 says risk 10% risk management, right? 10% risk management for the entire day. Don't risk no more than 10% of your account for the day. So if you take 3 trades and you're risking 3% each trade, and let's say all 3 of those trades happen to lose, right? That's not usual, but let's say it happens, it could happen, right? All 3 of those trades lose, you are at 9% for the day. If you decide to take another trade, you literally only have 1% left to risk. You got to be disciplined to not risk more than that 10%. If you already, then you're doing too much. Okay, you're doing too much if you're risking more than 10% of your account per day. If you reach that, just say, all right, today wasn't the day, regroup, come back again tomorrow. Nothing is wrong with that, right? So be disciplined, because you want to give yourself some time, you want to give your account some room to take losses. It's going to happen. It's inevitable for you to lose. Nobody's saying or making any promises here that this is going to be 100% guarantee of winning. No one ever said that, and if they did, they're lying to you. Okay, you're going to lose, but how much? We get to control that. Okay, so the 10% risk management for the day is where we're at. You shouldn't be risking 15%, 20% of your account. That's not what we do here. You're not going to give yourself a long time to cash back up if you do that kind of stuff. Okay, so to determine your 10% of your account, I do it pretty simple, right? If I have a $100 account, I just drop the last figure. If I have a $1,000 account, I just drop the last figure, and that's my 10%. So 10% of 100 is $10. 10% of 1,000 is $100. Another way that you can find your 10% is just moving the decimal point one place to the left, right? So if you have a $50 account, you move the decimal point right here. That gives you your 10% of $50, which is $5, right? If I have a $200 account and I move my decimal point one place to the left, right, that'll give me my 10%, which is $20, right? A 1460 account, move my decimal point one place to the left, my 10% of $1,460 is $146. If everybody's clear on how to find their 10%, let me know in the chat. Put an AC in the chat. If you're clear on how to find your 10%, put an AC in the chat. Perfect. All right. So awesome. Good. So 10%, right? When we look at 10% of an account in a dollar amount, there's also 10% of account in a lot size amount, right? So 10% of a $50 account in a lot size is 0.05. So this is telling you that you shouldn't be entering any trades in a lot size larger than 0.05. But let me just put this plug here. Your lot sizes will vary. I don't want anyone leaving this call and thinking, oh, okay, Tammy said that my largest lot size on my $50 account should be a 0.05. No, I'm not. And I could take a trade using that. I'm not saying that. I'm saying that 10% of your $50 account when it comes to lot sizes is 0.05. This is just some educational information here. But this is not what I'm telling you to do when you take a trade, because your lot sizes will always vary based on your risk. Okay, so I'm just showing you this to let you know and understand your lot size in a 10% amount of your account, okay? So the largest lot size on a $200 account, right, 10% is 0.20, right? And then your 10% lot size on a 1460 account is 1.46. And when we break down these lot sizes into dollar amounts, you can always revert back to the supreme chart. That's why we have it, right? So you can look and see, okay, a 1.0 is a standard lot, right? And a 1.0 is equal to $10 per pip. So if we look at a lot size 1.46, that is telling us that that is $14.60 per pip, right? A 0.20 is $2 per pip, and a 0.05 is 50 cents per pip. Hold a second, you guys. All right, so you guys with me with the pip count? Is anybody confused about how to calculate to figure out the lot sizes to a dollar amount? If you are, just put the chat before I move on. If you're all clear, you can put an AC in the chat and we're gonna move on. If you're not clear, just put a NAC so that I can break it down for you even more. I don't want to leave anybody that's on the call. Everyone needs to get this. Are we good? Are we good? I'm seeing a couple NACs. Okay, good. I don't see any NACs. Let's move on. Good. So rule number 3. Rule number 3 says to never use more than 50%. Somebody says not all clear. Keller, what is not all clear? Let me know in the chat. Let me know if you're not clear. Just say what you're not clear about so that we can break it down. Let me know. Let me know. Keller. Counting pips. So we're not counting pips right now. We're just calculating the pips to a dollar amount. So 0.05 lot size is, we just converting that into a dollar amount. We haven't counted pips yet. We haven't counted any pips here yet. Okay, we just converting the lot sizes to the dollar amounts. So 0.05 is 50 cents per pip. 0.20 is $2 per pip. 1.46 is $14.60 per pip. We haven't counted any pips yet. Haven't counted any pips yet, okay? So rule number 3. Rule number 3 says to never use more than 50% of your 10%. Never use more than 50% of your 10% per trade. I have to write per trade there, right? Never use more than 50% of your 10% per trade. All right? So now we break it down even more. Rule number 2 said we got 10% to risk for the entire day. But how does that look per trade, right? No, we already know on the risk management call that we're risking 3% per trade. So we know this. We know this. So when we come to the trading plan and we say no more than 50% of the 10, that's half, right? Which is 5. We're not going to be risking 5% in one trade. We're breaking it down because we want to give our account some room to breathe. If you happen to take like Kai did all the calculations yesterday, but if you risk a higher percentage of your account each trade, it gives you less amount of trades to lose before your account is blown, right? And we're not blowing accounts here, we are growing accounts, okay? So we're risking 3% each trade, right? Don't put all your eggs in the basket. Don't put all your eggs in one basket. Don't say, all right, today I'm gonna do 5%. Tomorrow I feel like 5% was good yesterday, but I feel like I want to make more money, so I'm gonna do 7%. No, be consistent with the loss, with the percentage that you're risking, and we are all clear that we are on 3% maximum per trade. Some persons like myself, I do 2%. Some people do 1%, but once you don't exceed 3% per trade, right? I mean, this is a personal, this is what we're telling you, but you got to make a personal decision about what is best for your trading account. But we're showing you what makes sense, okay? 3% just makes sense. Yeah, don't be over leveraged, Omar, or over leveraged, Olivia. If your name is Omar or Olivia on the call, you know, this was not intentional. I just chose those two names, right? But don't be over leveraging, family. I think that we are so far past that at this point. We understand what over leveraging brings. Can somebody type in the chat what over leveraging brings? Just let somebody that does not know in the chat what over leveraging brings. Blown accounts. Blown accounts. It doesn't feel good. You definitely Taliban accounts. You definitely would not be able to follow rule number 1 when you're over leveraging. And rule number 1 is rule number 1 for a reason, right? And over leveraging definitely does not help you to follow rule number 1. Okay, so don't be over leveraged, Omar or Olivia. Give yourself time to grow. Give yourself time to compound the account. This is the foreign exchange market is going nowhere. I understand you may have bills. I understand that you may have a mortgage, you know, kids, all that good stuff. But again, look at that compound plan. Look at that compound plan and see where you can be at in 30 days if you just remain disciplined to your trading plan and your risk management. Okay, so we're breaking down 50% here in the account. So 50% of $50 is $2.50, right? $2.50 per trade, and the lot size that's equal to 0.02. $200 account, that is 10. Half of 200 of the $20 lot is $10, which is a 0.1 lot size. And our 1460 example, 50% of that is 0.73, and that is equal to $73 in lot size. If that was clear, just put an AC in the chat so that I can move on. If that was clear, type an AC in chat. You guys with me? Perfect. Good. All right. So this is where we really dive into it, right? Rule number 4: get into trades no more than 2 to 4 times, right? Now today I think we sent out, I don't remember how many trades exactly we sent out, but how many trades won? I think about 3 trades won, but some of the trades we had to cancel. So based on 2 to 3 trades today, individuals were able to grow their account by 5%, 10%. So can it end like a yeah. Persons were able to, from 2 to 3 trades. Some of you were able to grow your account by 5%, 6%. I saw somebody in the trade results group said they grew their account by 15%. Daisha, shout out to her, she grew her account by 31% today, just from 2 to 3 trades. So if you are the person that when you check your history after a day and you are scrolling, like you are forever scrolling, let me know in the chat and be honest. Is that you? If after you check your day history and you can't look at all the trades that you take on one, like you just switch it to history and you can see like if we have is after 6, we probably got a new day so far, right? If I turn my phone, I'm not scrolling, like that's one page, right? This is one page that I have here. I am not scrolling. So I thought only reason that I have this many is because we cancel some trades, right? So I have 1, 2, 3, 4 canceled trades. 4 canceled trades. And no scrolling happening here. This is one screen. If I do this, you just seeing that black, right? And that's the bottom of my history. If you're the person that when you scroll, you're like this, at the end of the day, you're doing too much. You're doing too much. There's no reason why you should be taking 10, 15, 20 different positions in one day. That's uncalled for. At this point, I believe you're just scalping the market. You're just doing too much. That is telling me that you don't have a goal. You don't have a goal for your trading account on a daily if you're just wildly taking a whole bunch of trades. You should already met your daily target and be done, right? Go and tell somebody about how awesome this opportunity is and how you were able to grow your account by 6% today. You tell somebody that, they're like, what? How you growing money by 6% from your phone? Like, share that with somebody. There's no reason for you to be in and out of the market 20, 30 times a day. I remember asking a young lady in my group to send me her history. You should see the screenshots coming through. Like, if I took beer selfies with her camera, a whole bunch of them, that was just for like 2 days. And I understood why her account wasn't growing, because she was just doing too much. So no more than 4 trades in a day, right? And make sure that when you are taking a trade a day, that you're entering the take profit and the stop loss. You will never see us send a trade idea out without a TP and a stop loss. If you happen to see a trade idea come out without a TP or a stop loss, or it may have a TP and not a stop loss, or vice versa, it's because we're trying to get the trade out really quick, and we don't want you guys to miss the move. So we send it out so that you can get into the trade, and then we update it with the prices. But that happens seldom, right? We don't send trades out with a TP or a stop loss, because we understand how important those are. If you're entering a trade without those, it's like you're telling the market, just take my money. You have that permission, right? I don't know where I want to get out. I don't know where I want to get out for take profit or stop loss. So at this point, you make a decision for me, Forex. Like, that's literally what you're telling the market when you don't enter take profit or stop loss. And we don't do that here, right? That's not a part of our trading plan. And of course, be patient. Be patient. And as you can see how I have patience spelled here with a Y, this is how I spell patient, because patience pays. So like I said before, some trades will hit in 10 minutes, some trades will hit in 10 hours. We don't have control of how quickly or how long a trade is gonna take, but we know for a fact that when we enter that trade, that we're only risking a certain amount of money consistently. If you guys are with me, type in AC in the chat again, right? So we break down these lot sizes here. This information here is just literally for educational purposes and understanding how to break down lot sizes. But this isn't set in stone, because your lot sizes will always vary based on the trade idea and your risk. Okay, so as you can see here, I have copy, paste, wait. Copy, paste, wait. I know we say copy, paste, and profit, but there's a way to process in there. Shout out to Stefan this morning. We were in, what was it? It was GA, and Dre was like in the chat saying he's selling AU, so I guess the cross correlation or whatever that is expecting for it. He thought that we would have lost the trade, and Stefan started to GA, yeah. Stefan started to play some gospel for Dre and rebuke his words in the name of Jesus, and GA spike up, and everybody was seeing blue. Thank you, God, right? Everybody was super lit, and we were excited. But I bet some of you were like, oh gosh, Dre said that our stop loss is gonna be his equity. Oh my goodness, I don't know if I want to hold it. Somebody may have very much closed out the trade when Dre said that. But you forgot that it was a waiting process in between copy and pasting. We totally forget. Like, we probably never even acknowledge or realize that there's a wait in between paste and profit. So I'm here to let you guys know that this is copy, paste, wait, profit. Copy, paste, wait, profit. For us in the group, you can continue to say copy, paste, and profit on social media and to all your prospects. But when they get into this investment group, they're gonna see copy, paste, wait, profit. Kia says she hasn't heard from Dre. That's funny. Yeah, Dre was playing that song for himself this afternoon because he was in a drawdown, right? But yeah, so it's copy, paste, wait, profit, right? And of course, the goal is to make some withdrawals. It's Christmas coming up in about 3 weeks, 2.5 weeks, right? Give yourself something, pay yourself. And if your account isn't big enough for you to take a withdrawal, it's absolutely fine. Make an internal transfer though, right? Some like we could keep going back to how much money some of you made today. The fact that you grew your account by 5% today, let's say you do it again tomorrow. The next day you lose your little 3%, 4%, whatever the case may be. But at the end of the week, we always come out in profits. At the end of the week, we always come out in profits. And if you can see that at the end of the week, that you've been able to grow your account by 10, 15, even 20%, do an internal transfer. I look at my trading balance like petty cash. This is what I'm starting the week with, and whatever I end the week with in profits, I get to take that off. It's either a withdrawal or internal transfer and put it on my wallet so that I can see that my business made me some money, right? And I'm gonna start by the next week with that same petty cash so that I can do it all over again. That helps, build your confidence as well, so that you can see, yes, this is working. I can see that I'm building a wallet here, so that when it gets to a certain amount that makes sense to me, I can withdraw that to my bank account and I feel good, right? That's really what you want to do for yourself. Give yourself what do we call this? Why is it slipping me? Something check. I don't know why it's slipping me, but belief check. That's it. A belief check. Because some of you may not have withdrew from the market yet, and you definitely believe that you will. But I'm telling you, it hits different. It really hits different when you withdraw this money from the foreign exchange market that you made. It hits your bank account. You get to go to the ATM and withdraw that cash in your hand. It feels different. Trust me. Trust me. Okay, so pay yourself. I know we're trying to build these accounts of 6 figures, but right now, give yourself something so that you build that belief in this business. It feels different. Okay, so trading, we get into the actual trading now. You shouldn't be risking, like we said, 3% in each trade. All right, 3% in each trade. If you want to do 2% or 1%, it's totally up to you, but you shouldn't be risking no more than 3% each trade. So we're gonna get into actual trades now. Okay, so if you don't have the app Sting You, put no in the chat. If you do not have the app Sting You downloaded in your phone, put a no in the chat. If I don't see any no, then I'm gonna assume that everybody has it, and we can go along with this with these examples. All right, I don't see any no's. Great. So all of you should have Sting You and definitely be utilizing it. Sting You is literally my best friend, right? I go to Sting You every single time before entering a trade. Okay, I can't, like, it's a part of me right now. It's a part. I have a fiber in me that I need to know what I am risking before taking any trades. I cannot enter a trade without knowing what I'm risking. Okay, and I know that I'm only risking 2% of my account, so it's going to be $20, but I also need to know the losses I should use. So I know that I'm only risking $20 each trade I take, but what's the lot size that'll be equal to that? And Sting You, I don't listen. Trust me, I'm not the best at math. That wasn't my thing. It wasn't my thing. So I just tried to find the easiest way to avoid having to calculate. And if that's you, Sting You is your buddy. So download the Sting You app. All right. So I need some participation in the chat because I got some trade ideas right here, and I want you guys to walk me through it so that I know that you're understanding, so that when you leave this call, you're doing it the same way. So the first trade idea we received GBP NCD from Steady. Is a buy limit, and the first thing you want to look at is how much you're risking, right? That's the first thing your eyes should be fixed on when you are looking to take a trade idea, is how much am I risking in the pip amount. Okay, so this trade we're risking 33 pips. Give me an account balance to work with. Type in the chat. The first one that pops up is what we are using. 40. Let's do a bigger number. 225. All right, we can do 225. 225. So we're risking 3% in each trade, right? We do so when you have your Sting You app, right? the account balance and the percentage that you're risking, that will not change. It'll stay there forever and ever, amen, until you change it. What you're constantly changing though is the stop loss in pips. So whatever stop loss you see in that the pip code that you see in the brackets of the trade ideas, you come and you change that amount every single time. So this trade idea, GBP NZD, that was a 33 pip risk. So we're gonna put 33 pips here, right? Then you're gonna click select currency pair, because of course that is important. GBP NZD, and then you hit calculate, and the app does everything else for you. So 3% of a $225 account is $6.75. So what this is pretty much telling you is every single trade that you take, you're only gonna lose $6.75. Literally. It doesn't matter if the stop loss pip count is 33 pips, if it is 10 pips, if it's like that Euro JPY trade that is 5 pips, if it's 60 or 80 pips, right? It doesn't matter how many pips it is, because your percentage is the same. The dollar amount is going to be the same every time. What is changing is your lot size. So you guys understand when I say that with a $50 account, even though it's saying that your 10% in lot size is equal to 0.05, that is not solid, because if your trade idea is a 50 pip stop loss and you're using a 0.05 lot size, your account should not be taking that kind of trade. Okay, your account should not be taking that kind of trade. You're definitely going to be risking more than you should. All right, if you take that kind of trade, you're risking $25. That's literally 50% of your account. That's not what you're supposed to do. The trading plan says 10% per day. So you guys understand why those losses that I was bringing on is just for example purposes, it's just for knowledge purposes, but your losses is going to change all the time based on your risk. So good. So this is telling us, right, it has it highlighted here that our lot size that we should use based on this risk is a 0.02. I know it's saying 0.029, but we already know that in our MetaTrader 4, that's not how the lot sizes come up. It doesn't have a third digit behind the decimal. It only has 2. So the lot size here is a 0.02. Okay. So we're entering this trade at 0.02, right? And that's equal to $6.75, which is 3%. Doesn't matter what happens, you're only risking 3% of your account. Good. So this trade, right? This specific trade, the risk is 33 pips and the reward is 70 pips. So what is our risk to reward? What's our risk to reward ratio? Can somebody tell me in the chat? So we're risking 1 to gain how much? 2, right? About 2 point, I ain't really the best at math, but it's 2 point something, right? It's 2 point, maybe 2 or 2.3. I don't know, but it's 2 is almost 2, just over 2 to 1, okay? So we're risking 33 to get, very little. So we're risking 33 to gain 70 pips. So we're risking $6.75. The reward is 70 pips. If we take this trade, we enter it, we took our 3%, and the trade hit TP. We got another TP hit. How much did we make? How much did we make? We rated the trade at 0.02 lot size, and our reward was 70 pips. So if we go back, for those that don't know how to calculate pips, remember, we have this thing, we have the Supreme app. Look at this. 0.02 lot size, right, is 20 cents per pip, and 20 cents per pip with a 70 pip stop loss. We don't have 70 here, but it says 16. Right? So we know that if it's 80 pips at 0.02 is $16, then we could do some calculations here, right? We could do some calculations here. So it's $14 with a 70 pip TP. $14 with a 70 pip TP. Because if you look at We got a 60 pip example, that's $12. And then we got 80 pip example, that's 16. So if we go anywhere in the middle of there, we got 14. I can do it on my calculator. It's 14 pips, $14. Okay. So our reward was $14. So we risked, oh my goodness, we were risking $6.75 for a $14 reward. We risked $16. We risked $6.75 for a $14 reward from a 3% risk. Now, of course, when it went 3% in profits, then we broke even. We were $6.75 in profits, but then it went another sorry, not 14 pips, 30 pips in profits. That was equal to what is that we were risking 33 pips. Then TP, $14. $14. So the first trade, we won it. We feel good. Our account grew by 2.1%. We're up for the morning. USD CAD, up for a pending order. Like the example you have, how do you quickly work with the pits for each stop loss? If you're taking the trade ideas, trades, we always have the pit count in brackets. If you're taking trades from a product, they don't usually calculate the pits for you. What I do is I use my MetaTrader 4, the arrow. I use the arrow in MetaTrader 4. That's a whole nother training, but I use the arrow in the MetaTrader 4 to count my pips so that I know what it is that I'm risking. Yeah, so you have to use the ruler on MetaTrader 4 or the arrow on your phone. The ruler on TradingView or the ruler on your phone to count your pips. Okay, but if you're taking trade ideas, we always have them counted. All right. So good. We took one trade for the day. We won that trade. We're up $14. Boom. Our account now went from $225. So we won that $14. So that's what, $239 we have now. We're up $239. Great. Second trade, USD CAD. Buy market. This one you gotta get in quick. Let me just put this here, right? Sometimes a market execution will go instantly into profits, or sometimes it goes in a little drawdown. More times than not, it goes in a little drawdown. So you know, it happens to me. I still run to I go and check it out. Actually, I go and calculate it in StingU. Then I go to the app and put my horizontal lines on the chart and see if it's in profits. If it's too far in profits, then I leave it out. If it's in drawdown, I actually get a better entry, right? So I go to the app. Boom. We go back out. CM account balance, CM 3%, but now our risk in this trade is 11 pips. So we change that 33 to 11. Boom. It's USD CAD, so we choose the right pair, calculate. Watch this. Look at this. At the top, it's still saying $6.75 because it's the same 3% that we're risking. That dollar amount will never change once your percentage risk never changes. If you change that to 2%, that dollar amount will change. If you change that to 4%, that dollar amount will change. But if you are consistent with the percentage that you're risking, that dollar amount will remain the same. But because this trade they did is a smaller risk than that first trade, watch our lot size now. Look at our lot size. Our lot size previously was a 0.02. But now, because this is an 11 pip risk, it's saying that we can get in at 0.07. What? 0.07? We able to make some money. How much money is a dollar in the dollar amount? A 0.07 lot. How much money is that? If we take this trade and we're losing, how much is that in, sorry, well, we know $6.75, right? Which is 3%. How much money can we, what would be our reward? Because the reward is 32 pips, right? So yes, it's 70 cents per pip, right? 70 cents per pip. So 0.07 is 70 cents per pip. And if you multiply 70 cents by 11 pips, that'll give you that $6.75, which is your 3%. So the reward for this trade is 32 pips, right? 32 pips. at a 0.07, that's equal to 22.40. Oops. 22.40. So we're risking $6.75 to gain $22.40. But guess what? Life happens, trade ideas happen, and our educators are not gonna always be right. TP didn't get hit. Instead, SL was hit. SL was hit -3%. -3%. We got good risk. We don't, we aren't hyperventilating. We aren't talking bad about the products. We aren't talking bad about the trade ideas. We aren't talking bad about Kai or Stefan or Tammy. We understand that not every trade is gonna lose. How did you find that? How did they find what? How did they find what? Right? We know that not every trade is going to win. So we okay with a stop loss being hit. We okay with the stop loss being hit. But guess what? Because you were able to grow our account, the answer to my lot size, right? Look, we got a supreme chart. We got a supreme chart. So you can use the supreme chart to help you out, right? 0.01 is 10 cents a pick. 0.02 is 20 cents a pick. 0.03 is 30 cents a pick. And if you go all the way down to 0.07, that is 70 cents per pick. Okay? So yeah, so we lost this trade. We lost trade number 2. We negative 3%, which is equals to $6.75. But we just made $14. We just made $14. So we still in profits, family. We still up 3%. We are literally still up 3% after winning and losing a trade. How cool is that? How cool is that we can win and lose and still be in profits? Only if we're disciplined and consistent with our risk. Is everybody with me? I don't want you guys to just be watching. Like I want, like, let me know I'm with you, Tammy. Like, let me know in the chat if you guys catching this. Let me know in the chat if you're with me, because this is literally all Kai and myself we're trying to like reiterate to you. You're probably hearing this for the 10th time, but it's important because if you're hearing this for the 10th time and you're still doing something the total opposite, you're still missing it, right? You're not really hearing it yet. So I want to make sure that you are hearing it and understanding that even if you take 5 trades and you lose 3 and win 2, if your risk to reward is a 1 to 2, 1 to 3, or even greater, you will always come in profits, regardless. Okay, so we took a win and we took a loss. We're still at 3% in profits, and another trade just came out. Gold. We all love gold, right? All love gold. It's a buy limit from Gold Cup. Shout out to Luke Longmire. The risk is we're risking 30 pips. That's a good gold risk. Let's go to the app and we're putting that 30 pips in. We're letting the app know we're trading gold. XAU, USD, calculate. Look at that. That 675 ain't going nowhere. It's going nowhere. It's literally there every single time because I'm not changing my percentage risk. It's the same dollar amount every single time. But what you're making is gonna be different every single time, unless you got 1-to-1 risk to reward. But most of our trades are 1 to 2. No, StingU doesn't calculate. StingU doesn't calculate indices. It doesn't calculate indices, right? So good. This trade is telling us that we should use what if the account balance change. Me personally, I don't change my account balance until it gets into a new 100. So if I got a $200 account, until I get to $300, I wouldn't change my account balance. If I get to 225, 250, 275, I'm not changing that until I get to a new 100. This is just me personally. If you grew your account to 225 and you want to know put that in your StingU, it's up to you. It's really up to you. But me personally, I only change mine at every 100. Because I'm fine with, for my account, I have a 4-figure trading account, so I'm fine with the same forth with the $1,000 balance. But as soon as I get to 1,100, I could change. Then I change that to 11. When I get to 12, I change it to 12. But if I'm at 10, 10, 10, 10, 20, I'm not gonna change that. I'm gonna keep it at the same amount because no, I'm kind of tricking my account. I'm tricking my account to grow even more, right? You understand? Yeah. Are you gonna use the same balance until my next trading day? Yeah. Oh, it's personal. It's whatever you want. Me personally, like I said, I only change mine at a new 100. Anything in between there, when it comes to cents and all that stuff, I don't want that. Right? I keep it the same whole dollar figure until I get to a new 100. Okay, good. So this trade I did is telling us to use a 0.02 lot size. So 0.02, right, at a 30 pip risk is again 675, which is 3%. Same thing over and over. Now TP1, this was a great trade idea. Literally, this trade idea actually hit TP. Funny enough, we thought that we missed it. It was I don't know if Rudy on the call. We thought it missed the entry and then we ended up deleting it. But then a day later, it actually hit the buy limit. I hit TP. So this was a great risk reward. Yeah, Ricky. We was devastated. It was like, you serious? Like that legit come back and hit that buy limit? No way. But yeah, that happens, right? That happens. It also pays to wait for penny orders too, right? But you know, lesson learned. So we risk 30 pips. We risked 30 pips. To gain TP1 was 195 pips. Can somebody tell me what this risk to reward was? Can somebody tell me in the chat what was this risk to reward? This was like a 1 to, I want to say a 10. Can somebody let me know in the chat what this is? A 1 to 6. Okay, good. 1 to 6.5. Boom. So we're risking 30 pips to gain 195. A 1 to 6. At this point, you could have lost 4 trades and you get a trade idea like this. You're definitely on top. You are definitely on top. And because we know that this trade idea hit TP prior, guess what? TP hit. TP mash up. How much money did we make? So we were risking $6.75 at 0.02. What was our reward at a 0.02 for 195 pips? So 195 pips by 0.02 equals, how much is that? That's somebody tell me, $39. So you just made $39. Bam. Bam. Family. You just grew your account by 6%. So we took these 3 trades today. We won 2 and we lost 1. After the first, we grew our account by 6%. We lost the next one. It went back down to 3%, and we won this third one. And now we are at 9%, 9.5% in a day. If you're compounding your account by 10% per day, even if you're short by 1%, are you gonna go back into the market? Are you? Let me know, because I'm good with 9%. It's not kill cow. I don't need to go back for 1% because then I might end up losing back 3%. And I don't want to take that risk. It's a personal decision, right? So we started our account with $225, right? We made $14, then we lost $6.75, and then we made $39. What is our ending balance for the day? What, 225 plus 14 minus 675 plus 39. So now our account is at $271.25 at the end of one day. 9% growth in one day. Let me know if anybody in the chat would be good with that. Let me know in the chat if anybody would be okay with that. Because again, somebody's looking at this like, well, I only made $16. I only made, but you grew your account by 9%. It's the perspective. It's the perspective. And if you can do this consistently, because some days you may get your full 10, some days you may only get 7, 8%. It'll vary. The compound plan, remember, the compound plan is perfect. And we already know that trading is not. So even if we fall short some days, it's better than the money that we have sitting in the bank. All right, you guys? So if you're clear with this, put an AC in the chat so that we can move on. Put an AC in the chat so we can move on. Okay, good. But so we are at Pops. I know we have, I think I just checked the chat. We have a 7 o'clock call. Is that on this link, you guys? It's not on this link. So we good. It's not on this link. So we are Gucci. All right. Who's ready for Pops? Who is ready for Pops? I need a pop in the chat. I need Pops in the chat who is ready to learn how to pop. Because now we know how to manage our percentage, but in our with each trade, I need to know who's ready to learn how to pop. And my house phone is ringing. Pops come for 7 days morning. Good to go. So we are at Pops. No, tedious notes, family, because I don't want anybody to get off this call and be messing up Pops. I took quite some time to teach this because I really want you guys to understand risk management before you use this. It's pay attention, okay? Pay close attention. No, Pops it stands for profit off of pullbacks. Profit off of pullbacks. Pops will have you seeing red differently. Pops will have you seeing red differently. I want you know to think about red as bread. And we know when we think about bread, when it comes to money, we know that we stacking, right? People still call money bread or corn or whatever. Red equals bread. I want you to make sure you take a screenshot of this and rewrite this bread and jam to not kill me, right? Red is bread. Pops will have you seeing a negative and have you excited. Pops will have you doing rule number 1, like it's like you excited to see red in your account when you actually learn to do Pops and apply it. Trust me, you will never feel the same way about seeing a negative in your account once you really understand and grasp Pops. So red equals bread, right? Pops is, you use Pops only when you're about 10 pips from stop loss, right? Only when you're about 10 pips from stop loss is when you use Pop. Just a little side note. How do you know when you're 10 pips from stop loss? The red bar will appear at the side of the currency that you're trading. So it'll look like this, right? If you're trading USD CAD and that red bar comes up next to it, or you're trading GBP, JPY, whatever currency you're trading, if you see that red bar appear next to the currency, that means that you're 10 pips from stop loss. Of course, if you see that green bar pop up next to the currency that you're trading, that means you're 10 pips from TP. Okay, so you're only popping 10 pips from stop loss. This is the only time you are going to pop. Okay, your second entry is the same stop loss and the same TP as your original entry. Your second entry, the pop entry, this is what I mean, okay? Your pop entry is gonna be the same stop loss and the same TP as the original entry. And remember, you guys, of course, like just like trading, not every pop is going to be successful. I'm not saying that this is the holy grail. I'm showing you guys how you can maximize your profits using pops. Just bear in mind that not every pop is going to be successful, but just like how you're going to maximize your profits with a pop, you're also going to have minimum loss with a pop as well. Why? Because you're popping 10 pips from stop loss. So if you have a trade that was a 30 pip stop loss and you popped when it was 10 pips, your pop entry is going to only be a 10 pip risk, right? Whatever that is. So you will know, of course, based on your 10%, your 3% risk when you're getting into the trade, whatever lot size the trader they give, the thing you app give you, you're gonna split that up and you're gonna enter the smaller lot for your original entry, and then you're gonna maximize your profits on the bigger lot on your pop entry. So that bigger lot will have a smaller risk but a bigger reward, right? And remember rule number 1, relax. So we're gonna get into it so you know how it looks like. So we have something practical, right? Because I know we learn practical. We like to see stuff, yeah? So we have a trade idea here. AUD, USD, right? TP is 30 pips. Stop loss is 20 pips, right? So let's see, we're gonna continue using the same thing you add, just so we have, we could be practical with it. AUD, SUD, 3%. The stop loss is 20 pips. We're trading AUD, USD. Boom. So great. So the app is telling us that we could use a 0.03 lot size. Okay? The app is telling us that we could use a 0.03 lot size. Yeah? Which is 30 cents per pip. So we know what we're risking, right? We know that this 0.03 is going to be the $6.75. We're still using the same $225 example, okay? It's saying that this specific trade with a 20 pip risk, we get to use a 0.03 lot size. Now, I want you guys to pay close attention here, okay? Pay close attention. I really wish my landline would start ringing. So, we got in our first entry. Our first entry, we're using a smaller lot size. We get to break up this lot size. Now remember, if you don't want to do this, you don't have to, because the reality is sometimes you may, like for example today, I wanted to pop on GG. I entered my lot size, I entered my smaller lot size for my first position, hoping that it would have went into a drawdown so that I can then use my bigger lot size for the smaller risk and then wait for it to go up. It never draw down. So guess what? I didn't get to maximize my profits like when it was in on my smaller lot size. That happens. Am I upset? Absolutely not. I still made money, right? So just bear in mind that that is gonna happen sometimes. But I know that most of the times, trades go into red, right? And I know that red is red. So whatever the outcome is, I'm okay with it. So for this example, right, our lot size is 0.03. So I am gonna go into this trade at a 0.01 lot size. My first entry is 0.01. My first entry is 0.01, meaning I have a 0.02 lot size left. So tell me in the chat, if this 0.01 lot size were to hit TP, how much money would we make? Because let's say it did the exact same thing GJ did today, doesn't go into a drawdown, so we can pop an entry and it goes straight to TP. We would make $3. If this goes to stop loss, how much money would we lose? This 0.01 position, how much money? We would lose $2. Okay, great. Overall, if this hits stop loss, we make $3, we lose $2. We still in our this thing, you app still did not put us wrong. We're actually losing less, right? But we're trying to maximize our profits here. So good. 0.01 first position, you know, the trade goes up into profits, and then we start to see red. We were about 10 pips in profits, 15 pips in profits, and then we see the first red candle, second red candle. And now, because we know learning pots and we understand how pots work, we're not sweating like, oh my God, just hit TP. No, we excited to see that. Actually, I want to see that red bar pop up by the currency. I want to see that red bar pop up by AUD USD. Boom, the red bar just popped up. We're 10 pips from stop loss. We're 10 pips from stop loss. So now we're looking to pop. We are looking to pop. So let me do my pop entry here. Boom, 10 pips from stop loss. We get in right here. That's my pop entry. Right? That's my port entry. And now I get in at the rest of the lot size that you tell me that I could use. So if I use a 0.01 and my overall lot size was a 0.03, what do I have left to pop with? Tell me in the chat, what do I have left to pop with? 0.02. Be with it, right? Oops. You guys got it. We got 0.02 to get in here with. Now remember, it said your second entry is the same stop loss and TP as your first entry. Your second entry is the same TP and stop loss as your original entry. So we got in to this pot at 0.02. We're gonna modify the trade and put in the same stop loss and the same TP as our original entry. Let me know in the chat what now is our risk for this second position. What is our risk in dollar amount for this second position? Let me know in the chat. We're in at 0.02 and now our risk is, let me put it here. Our new risk is now 10 pips. Because remember we popped 10 pips. We popped 10 pips from stop loss. And now our position between here and here is 10 pips. And we're in at 0.02. So now we're risking $2. All right, so let's put some stuff here. Our first entry is a 0.01, right? So that risk is what? Was TP is $3. So we're risking $3 on our first position. If we won that, if the trade hit TP, 0.0, the stop loss is 20 pips, right? $2. And if we lose, we're gonna lose. If we win, we're gonna win $3 on that trade on our first position. Our pop entry is a 0.02, right? And if we lose that trade, we're risking the same $2. We're risking the same $2. But guess what? If we won that pop entry, let me know in the chat. So I want to see who gonna catch this. When this TP hit on this pop entry, how much will we win? How much? What is the the question I want to ask is, how many pips will my 0.02 position be catching? The TP was 20 pips. The first TP, the TP was 30 pips. Sorry, my bad. The TP was 30 pips. We popped 10 pips. We popped 10 pips from stop loss. So yes, it will be 30 plus the 10, right? It will be 30 plus 10. So let me correct this here, right? So it'll be 30 plus 10, which is 40 pips. So now we got a 40 pip pop, right? And by the lot size, which is 0.02, how much money are we making? How much money are we making on this pop position? This is our pop position. So that's a total of 40 pips by 0.02. How much money is that? $8. We are gonna be making $8 on this pop position. Look at that. Boom. Guess what? We popped that entry, trade turn around right at a nick of time. TP smashed, TP hit, TP smashed, Now, what is our total? I need some totals. Our total reward is what? This is $11. $11. But if we had lost this trade, I want you guys to really catch this. Really catch this. If we had lost this trade, we were only risking $4. But originally, Sting, you said at our 3% risk, we were gonna lose $6.75. But because I split up my lot sizes and I popped an entry lower, my risk was $4. But so I got more money off of using pops, and my risk was less than what Sting you said. So I'm still good because I was good with risking $6.75. But instead, I actually was only risking $4, but I gained more using pops. Somebody in the chat, let me know if this just jump out at them like a thief in the dark. Like, just let me know in the chat if this is clear. Just let me know. I would love more pops all the time now. Just, you guys catching this? Somebody's not all clear. No worries, right? No worries. We could go over it. Let me know where you weren't clear. Let me know where you weren't clear. Don't just tell me that you're not clear. Just let me know where you weren't clear. Because you're probably asking why pops. Why time you teaching this pop thing? Right? Because the risk is extremely low, even lower than what we were already. We still risking, we still with our 3%. Don't think that we're disregarding that, family, right? But with this concept, you get to lower that risk and maximize on your profits. I got up to second entry. Okay, cool. So we're gonna go over that. We're gonna go over that. So our first, but not the end bit. Okay. So you got us the second entry. We popped the entry 10 pips from stop loss. We popped our entry 10 pips from stop loss. Okay. When we do our math, our first entry was a 0.01. The TP is 30 pips. The stop loss is 20 pips. So when we do our math, right? Let's do over some math here just so we can make it super clear, right? So the stop loss was, so this is 30 pips by 0.01 lot, right? That is equal to, 30 pips. Does that look like 30 pips? 30 by 0.01 lot size is a $3 risk, right? $3 we're risking on our first entry. Because we use a small entry first, we were able to break down our lot size that Sting you told us we could use, which is a 0.03 ultimately. We use a 0.01 first, and then the second entry with our pop entry, we then maximize on that lot size, which was a 0.02 that we had left. Okay, so 0.02, right? The stop loss then on this pop entry was only 10 pips. So we had a 10 pip risk on our pop entry. So 10 pips by 0.02, that is equal to $8. Sorry, not $8, right? That was equal, the risk was $2, okay? $2. $2 risk because we got that 0.02 and our risk was 10 pips. If you do the math, let me go back to the supreme chart. Look at this. 0.02 right here is 20 cents per pip. So if we do 10 pips, let's go to the calculator. We're gonna gotta complicate this. Right, where's my calculator? Boom. 10 by 0.2, $2. 10 by 0.2, $2. So when we do that math here, the pop entry, we're only risking $2, but our reward is now going to be greater because we got in at 10 pips. But no, our original TP was 30 pips. So now we add that 10 to the 30, which will give us 40 pips. And when we multiply 40 by 2, that'll give us a reward of $8. So the first position at 0.01 with a 30 pip TP will give us a $3 reward, right? A $3 reward. And if we add $3 to $8, that's $11. So now if we do the math on what our risk was, stop loss was 20 pips. Y'all ain't helping me here. That stop loss was 20 pips. Right? So this was $2 risk. $2 risk, $3 reward. Okay, so our total risk was $4 and our total reward was $11. So this thing you app was saying that 3% on this specific trade was $6.75, but because we brought down the lot size, popped an entry, we only technically had a $4 risk, and we were able to gain a greater reward. Because if we, let's say we had entered this trade, but if it hits stop loss, we owe major, then how do you tell when to pop? How do you tell what to pop on? How do we end up with a major loss? We don't, right? Because if we enter 0.01 first, right, like we did here, right? We entered the 0.01 here. That original entry gave us a 20 pip stop loss. We're still using the 3% risk. Don't forget that we still using 3% risk. Look, the 3% risk told us this thing. You app, look at what the app said. This trade is an AUD and AUD USD trade. It's a 3% risk. We put in that it was a 20 pip stop loss, and it told us that we could use a 0.03 lot size. So we used the 0.03 lot size, but we broke it down. We used the 0.01 on our first position, and when price started to pull back, then we popped an entry 10 pips from stop loss. That's when you're popping your entry. When this red bar pops up at the side of your trade, that's when it's 10 pips from stop loss. That is where you pop your entry, right? And so now that's a smaller risk because that 0.02 is now 10 pips from stop loss and not 20. So we can't have a major loss if we're risking smaller on a larger lot. So technically, right, like I did here, on our first position, the 0.01, that has the original 20 pip risk, which is equal to $2. But then when we popped an entry 10 pips from stop loss at our 0.02 lot size, guess what? That gives us the same risk in the dollar amount. Technically, Sting, you said that if we're risking 3% of our 225 account, we're technically going to be losing $6.75. But because we popped an entry and we had a smaller risk on a larger lot size, or the lot size that we were supposed to use, if we were to lose this trade, because remember I said, not every pop is going to be successful. So we know that. We're fine with that. But we're not going to be losing more. We're technically losing less, right? Technically, we're losing less when we pop. Still use the 0.03 lot, so it's just use it differently. Exactly. So because we pop, we actually stand a chance by risking less of what we're technically risking if we enter all the lot size on our first position. but we stand a chance to gain more. Because let's say we had entered the 0.03 one time here. How much money would we gain at this position going to a TP? 30 pip TP, so that would be 0.03 by 30 pips. How much is that? How much is that? Let me know in the chat. $9 exactly. So if we had entered this 0.03 lot size at the original entry price, and we let the trade go to TP smash, we stand a chance of only making $9 with a 675 risk. That's what we are doing right now. But now we understand pops. We stand a chance to make $11 because we popped an entry at closer to stop loss. Is that clear? And even if it hits stop loss, you lose 0.03 loss, but on 2 trades with different pips amount on stop loss. Do you pop when the candle starts to show it's coming back up? I pop when it's 10 pip. I necessarily don't wait until it's coming back up. I just see, and when I see that red light, I know I'm 10 pips from stop loss. I pop, regardless of if it's gonna continue to go to stop loss, or if it's gonna reverse and go up. Once I see that red line pop up, I know I'm 10 pips from stop loss. So whatever happens, my risk is still smaller, and I'm still following my risk management rules when I pop that entry. When you pop that entry, you're still going to be following your risk management rules. I want you guys to catch this. If I had gotten in at the 0.03 lot size from my original entry that was given by the trade I did, the money that I was making was $9. I was risking, right? My risk was 0.03. So this was the reward, right? Now my risk was 0.03 by 20 pips, right? The stop loss was 20 pips. So that is $6, right? That is $6. How did you get 40 pips the second entry? Because the second entry was 10 pips from stop loss. The TP was 30 pips. So if I'm 10 pips from stop loss, we are adding that 10 to the original 30, and that's how we got 40. Okay, like Jonathan said. So like I was saying here, if we entered original lot sizes, the 0.03 at the original entry price, our risk is the $6 at the 20 pip stop loss, and our reward is $9. But because we are learning pops, we ended up risking less than the $6 because we end up here, look, $4. We end up with a $4 risk with our pop entry and an $11 reward because we popped that entry. So you guys, when you pop, your risk is extremely low. You're still following your risk management, but it's lower with pops, and your reward is much greater. Even if only you can be able to see when this will happen. What do you mean? What do you mean if only you be able to see when this will happen? Just let me bring some perspective, family. Let me bring some perspective. Even if the pop loses, even if we lose the trade, remember, you did not lose the trade because you popped. The trade lost because the trade was going to lose regardless, right? If we had entered this 0.03 lot size and the trade hit stop loss, it was going to lose regardless. It's not losing because we popped. But we stand a chance of maximizing our profits because we popped, and we even made our loss smaller because we decided to pop. When we can use pops, we can use pops when it's 10 pips from stop loss. Literally, you guys taking notes? We use pops 10 pips from stop loss. 10 pips from stop loss. When this red light right here, you guys, when this red bar pops up at the side, you guys ever notice that? There's a red bar. You know when we normally trade hits TP because it has a green bar at the side in our history, that's when it hits TP. No, when the trade is 10 pips from stop loss, it has that red bar pop up, that's when you can pop. That is your indication to pop. That red bar, whenever you see that red bar, just pop one time. Don't, no, because just bear in mind the lot size that you're supposed to use. And if you are able to break that lot size up, if you pop that one at 0.02, you don't have anything else. So don't go popping. You're at your risk management when you break those two lot sizes down. A 0.01 at the original entry and a 0.02 at the pop entry. That's it. Remember, if the trade hit stop loss, it's not because you popped, it's because the trade was gonna hit stop loss either way. But if it hit stop loss, because you're popping, you actually lost less. If the trade hit TP, you actually made more. Are you guys with me? It's not gonna click the first time you hear it. Don't worry, this is not gonna be the first and last time we do this training, but I just hope that you guys are catching this. When you are popping, you stand the chance of risking less. Your risk is extremely low. Now we go from knowing, okay, on our 225 account with a 3% risk, that's 675. But when I pop in this specific trade, I was only risking $4 because my entry was, one of my entries were lower, but my reward was greater because technically I was supposed to make $9. But because I popped that entry lower, I made 11. So just know that either way, you win with pops. If you lose, you lost less than your 3%. You technically still was okay with risking 3, but with the pops, you lost less than your 3%. If you win, you made more money than the trade was allowing you to. Okay? So just know that, and we're gonna, go over your notes. This is recorded as well, so you're gonna be able to watch the recording. I'm gonna do this training another time, but just know that pops, red is bread. You get to see red as your friend now and not be panicking, okay? But from the get-go, before you enter the trade, you already divide your lots. Absolutely, that's what we did. That's what we did here. When we use this thing, you act said is a 20 pip stop loss, and our lot size is a 0.03. So when we came back here, I showed you guys we have a 0.03 lot size to split up, right? So we entered the 0.01 first, and then we used the bigger lot size, which was a 0.02, because 0.02 and 0.01 is equal to 0.03. We use the larger lot size for the pop entry. So you don't do the bigger lot size for the first entry, do that for the pop entry, because then you get to make more money when it hits TP. But if it hits stop loss, you still lose less than what you were supposed to lose anyway. Okay, I fully understand. I guess I didn't text it right for you to understand. Yeah, I guess not. Okay, so if you're clear, just type an AC on this, and if you're not clear, this call is recorded, and we're gonna do this training another time, so that some reps, some good reps, so that it can stick another time. Don't worry about it, sweetheart. All right, so rule number 6, because we got to TT in about 15 minutes, right? You see big and bold here. Stay consistent. Stay consistent. Consistency. Okay, ways that you can remain consistent by following a percentage amount. If you're gonna risk 3%, stick to that every single trade. If you're gonna risk 2%, stick to that every single trade. If you want to risk 1%, stick to that every single trade, because like I showed you in the examples, if you stick to a consistent percentage risk, regardless of if you lose 4 trades and you get 1 good trade as a 1 to 5 risk to reward, those 4 losses are going to be wiped and you're still going to be in profits. So be consistent with your percentages, right? Get on trainings. It's important to be on calls. We are learning pops for the first time here. Some of you maybe for the second time. It's not going to stick. You're not going to fully understand it. And I would recommend you practice pops first until you understand the calculations and all of that good stuff before doing it on your live account. Just something to remember: if you are going to pop, Your lower lot size is going to be the first entry. The bigger lot size is going to be the second entry. Okay, but practice, get on trainings, get on trainings, just good reps, right? Right now you're on this call, you should already have a screenshot, a boomerang, a nice little video screen recording to post on Instagram. And we gotta get into the habit of checking in whenever we're on calls. Post on Instagram and put the check-in and tag a couple family members so that we see we are on the calls, we're putting in these reps. If you were in the gym and you wanted to gain some muscle, you want to get, lean and fit, you would be constantly going to the gym so that you can build that, right? It's the same thing with trading. It's the same thing with these trainings. You want to be constantly on the trainings and getting in these reps so that the information is now seared and it flows easily when you're actively trading, okay? Listen and apply. Listen and apply. That's super important. Listening, of course, taking notes is in between there and applying what it is that you have written. Don't just take notes, but become your notebook. Okay, if you have to have daily goals, follow that. If you know your goal for the day is 10%, when you get there, you're done. If you happen to get to 9 or 9.5, don't force it. Be done for the day. Be disciplined. All right. For the individuals that are really learning this skill set and want to master over time, when you find a strategy that you understand, stick to it. Pick a strategy and stick to it. Because all strategies work, all indicators work, but how are you working it? Be consistent with that, and you're going to see results. Practice, back test it, do it over and over and over. Once it stands out to you, stick to it. Okay? Set alarms. We know, but by 8 a.m., Denise has the channels updated with what our daily schedule is going to be. Set an alarm in your phone. You know that trading plan is at 6 p.m. Put a nice little 5:45 reminder or 5:30 reminder. Call at 6 p.m. You know that TTT is every Tuesday at 8 p.m. That's standard. That alarm should be in your phone regardless, right? And full calls, whatever other training is, or gosh on mornings, set some alarms. This will help hold you accountable to get on the calls because, like I said, you got to get these reps in. It's important. It's super important. For the individuals that are trading, you have to know what time of the day is best for you for trading. So if, oh gosh, on the morning isn't good for you because you got to get ready for work, then Asia session might be good for you. And you need to hop on the night watch call with Stefan at 7 Figure Freedom, right? Pick a session and stick to it, right? To it, right? And of course, in the academy, in Go Live, find your favorite educator and watch him. If you ask me who's my favorite educator, I'll tell you. Anybody knows who's my favorite educator? Anybody in the chat can put in the chat who is Tammy's favorite educator. Let me see who knows. Stevenson Lindor. I could go and listen to Kim and Lano. I could listen to any other educator and hear them tell me by yourself. But when it comes to this skill set, Stevenson Lindor, that's my guy. I understand how he teaches. I understand patterns in the market. I can recognize them. And that is who I learned from. And I've been learning from him for the past 2 years. Find an educator and stick to them. Because like Kai said, he started watching Night Never Wet and those guys, but he did not switch up how he trades. If it made sense, he added it to what he already knows because he studies Lindor strategy, right? And just makes it even better for himself. Find an educator and stick to it. You gotta like master or hone your skill set with one strategy first before you can decide, okay, I'm gonna go over here by Mike and add his strategy, or I'm gonna go over here by Luke and add his strategy. When you haven't really seen a good results from this one thing first. So be consistent with that as well. Internal transfers, we spoke about this, right? Pay yourself every week. If you grow your account by 10%, 50% at the end of the week, take it out, put it in a wallet, and then start fresh, right? See your money. See your money is gonna help you feel good. And ultimately, you guys just remain disciplined, right? Just remain disciplined to all that we went over here, all that Kai and I go over for the risk management and the 3% and how to calculate. Just stay disciplined and consistent with all of this, you guys, and your account will grow once you stay disciplined and consistent. So that's it for the call. I don't want to run over to TTT.